Hello, folks. Welcome to another edition of Market Action. Dave Russell here. I want to also welcome Lucille joining us from Vantage Point. I also want to apologize if I am a little bit groggy today. I only slept about 2 hours last night. Trying to look at and adjust to a lot of things here. I'm just looking at the S&P now. I had an initial thought we might have a little bit of a retest to the recent highs, but I think we could see this thing just explode higher, and we need to be this is just not a normal day, as I think everyone knows. Here's what I'm looking at. Let's look at the SPX. Let's look at the cash index. The futures are so crazy. You don't want to overthink the overnight moves, but I thought we were going to see a pullback. On SPX, I initially put that we were going to pull back to 214.80, which would have been this high. But, it might not happen. And I think one of the things that I'm watching a few other things, and one of those is bonds. This thing with the bonds, this is epic. I mean, this is not something, this is what I talked about a while ago when I said that the upward pressure on bond yields was starting. And we were talking about it back here. We saw that MACD, and look at the 30-year yields. I mean, this is it, Paul Volcker, early 1990s or 80s, whatever you want to say. The bond bull market is over. It's done. 40 years, 38 years, whatever it's been. And that has all kinds of implications, and they're not necessarily bad. But this is huge. And so I think the thing that's most interesting is the way these bond futures just got crushed last night. And at that point, in the morning strategy note today, I'll tell you folks, when I was writing my strategy note today, I was so close to going bullish. And I'm just like, I said the risk is sharply skewed toward a breakout. Significant cash on the sidelines. Treasuries have broken support. And the S&P is poised to rally through the 50-day moving average. That's pretty much what's happening here. But look at the Treasury. These are the futures of the prices of bonds. But, I mean, look at this. I mean, this is a huge move. And this is a sea change. So I think, we are now entering a phase when we're going to see financials, industrials, they're going to do well. And utilities, consumer staples, REITs, they're going to get just slammed. So I think there's implications. I mean, gold now is negative. I don't think we want to be very much into pressure. I'm really not sure, but I think that this is bad for gold miners. There's a lot of things I'm trying to figure out here. I mean, also what's interesting is we've had some bad oil numbers, but look at these futures. I mean, holding 44 on crude, massive bullish engulfing, hammer today. After bad EIA numbers and bad API numbers last night. Now, if we're going to enter a mode here of higher interest rates, there has been a correlation where interest rates go up with oil going up. All right, so the thing about correlations is you might think they don't make any sense, but they're there and they're real. And we have seen a pretty strong correlation between oil prices and treasury yields, for the most part. I mean, it's not day for day, but if you look at, this long sell-off we had in oil a while back, there was a lot of correlation with bonds. So anyway, I think right now with bond yields going higher, we have the potential for that to keep oil supported, and it's not good for gold. It's not good for gold at all. So I think we want to just bear that in mind. I don't think it's a good idea to be holding GDX right now. I'm just looking through a lot of different things here. So the options paper we saw today, I'm going to hit on this and that briefly. FedEx was really grabbed my eye. We had some December 185 calls. Look, I mean, this stock I think is going to just crank higher. I mean, this is, we did the alert and the stock was down. It's up about 3 or 4 points, since we cited it on the shares. But I think FedEx has had good earnings. I mean, this is actually an insanely bullish chart if you really look at FedEx. I mean, this thing broke out the 52-week highs. It held the 50-day moving average. I mean, this stock, I think, I'm not sure if it's all-time highs but this thing is just getting ready to take off. So I think FedEx is very, very bullish. Let's take a look also at some of these energy names. And then, like I said, and I've been saying that I don't want to overstate this, but I don't know what people are expecting from OPEC at the end of the month, because these guys are going to be like kids who like, oh, you have to write your homework, and then you show up and you come into to school, and it's like, it's supposed to be like 10 sheets of like math problems, and you did like 2. That's what I think the guys are going to be like at OPEC. They're going to show up with nothing in terms of cutting production. But right now, that's not the thing. So anyway, the money's coming in out of energy. Suncor, December $30 calls were bought. These are right at the money. We were saying, look, these are at the money. They've got a lot of delta. Stock pulls back a little. It's going to hurt really fast. So we said, hey, why not instead do this vertical spread? Let's buy the 31, sell the 33s. At the time it was going for like 60 cents. That to me is like, an easier way to do the trade. But this is Canadian Oil Sands. FMSA. This is kind of like silica. They do fracking sands. December 10 calls bought in this one. Fairmont Santrol. Also ExxonMobil. December 90 calls were bought in XOM. Bullish engulfing candle on this chart today. So, big move. I want to take a look back at the S&P now, because I'll be honest, I might have kind of jumped the gun here. This is, this is one of the more challenging ones that I've had. I'll be honest. All my kind of analysis would say that we have to retest yesterday's high on SPX, which is about 10 points down. And that would be, if you look on SPY, it would be right around 214.80. So, that was my initial note. I literally changed it as the webinar, right before the webinar started, because it looked like we had a bullish, ascending triangle here. I don't think you want to be short anything here. I think there's the potential for this thing to really break higher. Now, obviously, I haven't even mentioned yet, Trump victory last night. I think it points out one thing in general, which is that there's one thing I wanted to mention that I think there's a lesson to learn from this, which is that to me, Trump was basically like a stock. He's like NVIDIA, or like, some of these stocks. He's like tech resources, right? You look at it and you're like, oh, it's going to pull back, and it doesn't. When Micron went on its run, like 3 years ago, this is what Trump has been like, and it's like, oh wow, he doubled. Oh, he doubled. Oh, he doubled. That's what it's been like. I mean, and I think we just have to realize that in general, things like this happen. They happen in, society and economics and everything else. But, when there's a trend, and I think the point of this is not to talk about politics, is to talk about the market. When you have something that is cranking and the trend is there, even if you don't understand it, don't overthink it and don't try to question something when all the empirical data keeps pushing in one direction. And the political scientists who were right, who called Trump, they all were citing it on the initial strength in the primaries, which is like this. This was the primaries. Think of it like this in tech, right? Boom, it doubled in like a few weeks, or quadrupled or whatever. That's what it's like. And when you have the explosive move, it keeps going. And when you have stocks that do this, you get the same thing. So I think it's just an interesting and kind of instructive lesson that that we can all, bear in mind over time. So in terms of like what it means for the market, I think it's well, here's the interesting thing. Let's take a look over here in the Options House platform. I often have this thing. This is my watch list. I love the way that we can have all these different like little lists. And I use these assiduously. It's like having different filters you can put on your binoculars or something, and like, different kinds of detecting mechanisms. Today, the IVE, this is an ETF that tracks the so-called value stocks. It's doing great, and the growth stocks are very weak. So basically what we said very early, in our strategy note this morning, and by the way, if you guys want, you can email me at david.russell@optionmonster.com to be added to my list. We said that there's NASDAQ and tech are likely to lag, especially high multiple e-commerce names. And that means stocks like Amazon, stocks like Facebook. These are not the names where we want to be right now. These are very expensive stocks. You know, some people say, well, Google's not that expensive, but it's like, you know what? It doesn't matter. It's in the same camp. Apple is too, even though you can say Apple's a value stock. You know, you can say that, but the market views Apple as a growth stock, and it's a tech stock. It's a growth stock, and I think it's better to think this way in terms of, and I've mentioned this before. There's cyclical growth and there's secular growth. Apple is a secular growth stock. Google is a secular growth stock. That means they grow based on the fact that their business is growing. They have a new gadget or something, you know, that kind of thing. Then you have cyclical growth stocks like Caterpillar. When the economy is growing, it's good for Caterpillar. When people are building highways and bridges like Trump says he's going to do, it's good for Caterpillar. It's good for Ingersoll Rand. It's good for Terex. It's good for Chicago Bridge and Iron. It's good for U.S. Steel. These are the names that we're seeing, and this is like, these are value names. So I think it's important to realize that that's the rotation that's evident today. That's the rotation that we're seeing of bonds going down. And then when you look at the other one thing that's kind of counter to this is the enormous strength in biotech, but that's because of the perceived political risk of Hillary Clinton to the biotech sector. So I think right now, you know, you got to be really careful chasing some of these sort of these growth names like Caterpillar and everything else. I think one worth looking into is this Mexican cement stock, Cemex. Now, obviously, Mexico is getting slammed today, but you know, at the same time, this is still a really bullish chart. And look at our countries here. Mexico down almost 9%. Let's take a look over here. We have a countries group on Research Lab, and you know, look at today, member performance, Mexico, bottom of the list. Russia and United Kingdom are good. Everything else is bad. We have been saying, you know, like, for example, in EEM, we have some puts in EEM. And, you know, I have to be honest, though. I think that EEM here, you know, things like, I want to see Brazil, actually. Because, like, at a certain point in time, I think Brazil, you know, oil, that sentiment is going to, you know, kind of remain in place, and probably these are not going to sell off yet. So I think, you know, it's hard to pick between these countries, but I think that some of this stuff with Mexico, I mean, this is kind of ridiculous. I mean, obviously Trump said he's going to, I don't know if he said he was going to repeal NAFTA or whatever it is, but I mean, look, I think it's one of the things you got to be really careful when you listen to these people on television, right? You got to remember, and I did this, I was a TV producer. You don't bring on the person who's intelligent and informed, but you bring on the person who's going to talk well and be well known. So you bring on some of these guys, they have big names and stuff. They might manage billions of dollars, but it doesn't really mean that they know what they're talking about. And I think that at the end of the day, you're going to see that, like anything else in business, business is business, and people figure stuff out. That's what we do in business. That's what the point of the market is. And then when you look at Mexico here, you know, they're going to have to probably take some lumps on this thing. But, you know, it's still a country that has a lot of positive stuff going there. And I think if you think that it's just going to destroy, you know, 25 years of massive industrial infrastructure that's been built since the mid-'90s, I think that's just silly. So I think Mexico here is probably not going to, you know, it's probably going to chop around, but it's going to bounce. And I think a name like Cemex that's been so strong is probably going to be attractive and interesting. Kansas City Southern, I'm not sure about this one. It's trying to hold 80, but, you know, I think, you know, this is not something I think to really make the hugest, biggest deal of. At the end of the day, this will be worked out. That's how people work through things. So some of the other things I think are interesting here. First, before I look at some of the other paper, well, one other thing I want to mention is Rio. This thing has been cranking. Today they're buying the January 37.5 calls in Rio Tinto. That's a steel and iron name. Okay, let me turn to some of your questions. Sorry about that. Baxter is breaking support. Is it going to go to the 200-day moving average? I'm not sure what's really wrong with this company right now. I think it goes to 45, and by that time, the 200-day will probably be there. I think this low from mid-September on Baxter is the place to look. Another stock I want to mention, folks, is, look, I think there's been an idea that frackers are going to do well and all of that. This is a stock that, and going into the winter, you know, this company makes snowmobiles. Polaris, PII. If you read their earnings from a while back, I'm pretty sure it was this one and not Arctic Cat, but let's actually take a look on Research Lab. These are Arctic Cat actually had bad earnings today, and it's down. So you can see ACAT. But Polaris, let's actually look at the earnings here. So there was energy workers. Like, what was this? This was the beginning of the year. Less energy demand. So basically, this is one basically this company, has been, they've benefited from this, growth of populations of like oil workers in places like Montana and the Dakotas. It's interesting. This stock had a good double bottom at 70. Going into Christmas or into the winter anyway. And then you have this, look at where we have the strength today. Look on Research Lab. I mean, we're looking at the frackers again. That's where we have the paper, FMSA. Frackers, somewhere near there. So I mean, there's this idea of domestic energy investment, and you know what? That actually corresponds to, to Polaris, PII. So I want to put this one on people's list. Also, looks like it's breaking that 50-day moving average. I'm looking at the SPY on my other screen, and I'm sorry I have to keep doing this, but this is, like I said, this is not a normal day. So let's take a look at, look at this. I mean, in this case, this is going to rally. I think this is it. I mean, I didn't see this so much before, but it's making a higher low versus where it did about an hour and 20 minutes ago. I tend to think that when you see, you know what? Wait a second. I normally would not want to, but see, look, now we're getting a triangle here. That's what's happening. It's a triangle. When you start to see a triangle, take it seriously. So that triangle is happening. Let's go back to the SPX. That triangle is happening right here. See, this is in many ways this was kind of like the day of reckoning and pain was this day. I'm gonna, you know what? It's this high from back here on, what was it? This high 2154 on October 24th. I think that high on October 24th is really our what we're battling here. And it looks like we're forming, because when you see a triangle form, it will often occur at a flat line from 3-4 weeks back. And that's, I think, what's happening here. So, like I said, I think there's a lot of cash on the sidelines. I think a lot of people were, I think when you have an event, the key thing is the event just needs to go away. That's really, I think, one of the most important things to realize is that when you have event risk, you simply have to say, all right, an event is coming. It could be earnings. I mean, look at for example, RX. The company had earnings. They were excellent. And then what happened? The stock got just demolished. Why? Because people wanted to sell it, and they just waited for the earnings, and then they sold it. And there's like 4 other examples of this earnings season. There were companies people just wanted to sell. I think Grubhub was one of them. This has happened to Grubhub before. They have good earnings, and people are like, I don't care. I'm just waiting for earnings day, and I'm going to sell it. So it's like literally the event happens. The event is just a line in the sand. And it doesn't matter what the event is. All that matters is the stock is going in a certain direction, and then after the event happens, then the move occurs. And I think that the problem with a lot of people who watch television and stuff is they think that the event matters. If Hillary won last night, the market would be up. Trump wins, the market is up. It doesn't matter. The key thing is the market has a desire to move higher, and at this point, that pressure, we just need to get through the event. So that's, I think, an important way to think about events. And it's the same thing for earnings and everything else. You will see companies that have good earnings and they drop on the news just because. All right, I'm sorry for running my mouth so much. Like I said, I'm a little tired. All right, should we close the Bank of America call spread? Well, I think Bank of America, you should roll them up. I would say you want to now, again, I mean, this is now a little bit ridiculous. We said 18, we got it. And now I think you want to go, I think you want to roll, I think that what was the spread? Can you tell me? Actually, if you just say B of A, just tell me what that vertical was. I don't have time to look it up so quickly. STZ, should we buy it with the drop this morning? This is all complicated because this has the whole Mexico thing with everything else. The one thing I'll say about this is, it's the Mexico problem, but there's something else. Let's take a look at our spider funds here. Consumer staples are not where we want to be. And this is a consumer staple stock. This is not where we want to be when Treasury bonds are in the midst of, a biblical, dimension meltdown like they could be doing now. So I think, Constellation Brands, to me, I think consumer staples are just a bad place, and utilities are a bad place. So no. Yes, it's got the Mexico oversold, but it's got the sector problem here, and I don't think you want to touch it. All right, thank you for Johnson & Johnson December calls. I haven't even looked at this stock in several days. Oh, I'm glad to see that. This company is just a monster. I traded it poorly. I knew this. I said to buy it on the pullback. I bought it too soon, and then I basically sold it for a small profit. But I've been really bullish on this name. Do I like Smith & Wesson? Not really. I think there was a pretty clear thing that, Smith & Wesson is going to benefit from a Hillary presidency. Perception is now that people who are going to buy 50 guns are now not going to buy as many. I think that Smith & Wesson is now going back toward 22. So I think this stock is this is now a very troubled name in my opinion, because this had a very clear thesis and it's broken. So this is no longer a good stock to even think about buying. Bank of America, December 18, 19. All right. We have so in our option monster premium service, we have several open positions in Bank of America, but beer is a staple, yes. If you take a look here in Research Lab, just go to XLP, and I'm 99% sure that you're going to see that the beer stocks are in there. If we look here at the members, STZ, there it is, consumer staples. You also see Molson Coors is in there. So yes, it is a staple along with you got your cigarettes, you got your your Wheaties in here, and your your Diet Coke. So you got your Hormel, Mikey's in that one. All right, so Bank of America. I think you want to do in Bank of America anything near term with a lot of delta now that you're cleaning up on. You want to get out of that, and you want to roll to something out of the money, lower delta, a lot of time. And then you're going to have gamma, and you're going to have time, and you're not going to have delta. Because the thing is that I think there's a 50-50 chance that Bank of America takes out 18 and it does something outrageous, like, something that I don't even want to say, like doubles in 6 months. I just said it. But it could. And that's when you want your gamma. That's when you want time, and you don't want a lot of delta. Don't forget, the election is over now. There are other events. And we have coming up, let's take a look over on the Research Lab calendar. There are other things that happen in the world. Let's take a look here. We have consumer sentiment. But, I don't even know if anyone cares about these guys anymore, though. I think that, I think the Fed is, but the retail sales, these might not be good. Consumer sentiment is probably going to be a terrible number. That could slow down the advance in bonds. Retail sales might not be very good. I actually think that there's some evidence of the economy actually kind of slowing a little bit. We have jobless claims tomorrow. Those have been rising. I wouldn't be surprised if we get bad jobless claims, and you can get, a modest rebound in treasury bond prices. And I'm not talking much, but the key thing is, like, if you have a lot of delta and not a lot of time in your Bank of America position, you could see your profits like boop, gone, real fast. And that's like we were saying, like in SunTrust a while back. We said you wanted when SunTrust, wow, look at this. But when SunTrust had kind of pushed up here, we said you want to basically get rid of your delta and you want to go out in time and have and that in this case, and this is exactly the reason why. See, because SunTrust pulled back, then it snapped higher, then it pulled back. Look at all this time. If you had been in those October calls, but I think we actually said something like rolling further out in time. So, I mean, that's the whole idea of why we want to do that. And if you think about it, where was SunTrust when it was somewhere around here when we said to do that, okay? Well, look at where Bank of America is now. It's also pretty much at a 52-week high. So, I mean, that's the time now when it could sit here for 2-3 weeks, and it could drop 50, 60 cents during that time. And those calls that you own in December, really won't be a lot of fun. So I think now what you want to do is you want to do something like go to like the May 22 calls or something. I mean, look how cheap these are. Maybe not 22s, maybe the 20s or 21s. You want to come up here somewhere. Because I'll tell you, Bank of America could break out and just be crazy. I think this is a great stock. I mean, these guys went from being like basically the worst to the best, from what I can tell, as a bank, as a major bank. And I think they're doing a great job from what I can tell. So I think this name has the potential to break out. You want to own the gamma, and you want time. Do you have an insight on IMMR? I don't know what this company is. A licensing company for, I don't even know what haptic technology means. This to me looks like an expensive growth stock. It's a small cap though, and we are actually seeing today rotation back to small cap, and that could continue. I think if we look here at our indexes, these small caps are clearly outperforming. Look, I don't know anything about this company per se, but I would tend to think that from a macro point of view, as a small cap stock, this has the potential, I think, to take off. So if there is something really promising about their business, I would tend to think that this stock could really launch. So, yeah, I think it makes sense, but I don't know much about it beyond what I just said. Do I like Ionis? Biotech, yeah, we've loved this name, and it was just trashed for so long. Yeah, I mean, there's a lot of latent demand for this stock, I think. Yeah, I mean, it's up a lot, but I think there's another one that looks pretty good. It might take some time, though, to really break 40. So I think this stock could consolidate here for a while. So I think you need a clear breakout through 40, and that could still take a long time. So that 40, 41 area. The name that I think is really extraordinary is Acadia. Their earnings were like amazing, and the chart's been really sloppy. But this is a growth stock that we've been waiting on forever to come to life. I'm waiting for it to pull back I don't think it goes straight up. I don't know what I want to do with it technically, but I know that I want to buy it. Maybe a pullback to 26. The other one that's just nutty is Exelixis. So another name I want to point out over time, and I've mentioned this name, it doesn't get a lot of attention, but this Repligen, this stock is awesome, and they had this is another one, revenue beat. Everything about this stock continues to be strong. See, they gapped higher and they just sold it. This is another one that has been on my list. So anyway, I think there's a lot of things here in the biotech space. I bought some Amgen myself today. I was like, you know what? I wanted to get it closer to 140, and I just bought a little. I'm like, I think in a couple of years this is going to be, this stock's going to go higher. And But again, I think this is a different sort of approach now where you have some of these biotech names. Um, if you really have the time to really get your good entries, and I don't always do that because I'm doing a lot of other stuff. But I think a lot of these biotech names, I think we're going to see a rotation back into them. I think that the fear of Hillary now, going away, you're looking at a lot of stocks that I think are so oversold and that have had good earnings. I mean, Celgene, wow, I hadn't even looked at it today. Celgene had good earnings, so I think you're going to see a lot of opportunities in biotech. I don't like GDX now. No, I don't. Like I said, look, I mean, there's a clear rotation happening away from bonds. And like I said, I think, we could see a little bit of a consolidation, but I think that the risk right now is that gold miners probably do break lower. I'm not saying to short them, but a lot has obviously changed since last Friday. I continue to see downside risk in oil. I'll be honest. I think there's a good chance it breaks down, but in the near term, it doesn't want to. And the reason I like GDX was I thought I saw that sort of thing panning out. But right now, the way things are, it's not working that way. So I think right now at GDX, I think that it could obviously maybe break a little bit higher here, but this to me is not a great situation. When you look at the way the dollar index is cranking higher, big bullish engulfing candle on the daily chart of the dollar index today. That's not good for oil. For gold miners. The breakdown in bond prices is not good for gold miners. The cyclical growth story in the U.S. is not good for gold miners. So I'm not bearish on them, but I don't think there's a good favorable thing. I was hoping for gold to rally too. I still own Seabridge Gold myself, and I'm probably going to sell it today. Should we buy BABA? It's close to the 96 support line. Well, I don't think so. I think right now there's a rotation, like I said, away from the expensive growth names. Alibaba kind of has like a double trouble for BABA. It's Chinese, it's international, and at least for now the narrative is, international bad because of Trump. But the second narrative is it's a NASDAQ secular growth stock. And if we take a look here I think there's been a real weakening in, Trump or no Trump. If we look at the Chinese tech stocks, they were awesome for a long time. 12-month return, crushing the S&P. Even the last 3 months. But the last month, these guys have all hit the wall. And Alibaba has been last man standing in the group to a certain extent. There's a few others, I guess, that are still, I'm exaggerating a little, but not too much. This sector, this group overall has really lagged, and it makes sense. Let's take a look at the same time at our key indexes here on Research Lab, and what you're going to see is, you're going to see the same thing. You're going to see the, now, I know some people are going to ask a question, so I am going to address what you're about to ask at the NASDAQ. But let me just mention here, remember performance. Look in the last month. NASDAQ has basically fallen behind following 6 months of strength. Now, you're clearly going to say, well, in your advantage point yesterday, you said that you thought the NASDAQ was going to outperform the S&P. Well, I'll tell you, my thesis was that the S&P was, that the market was going to rally on a Hillary victory. And I thought if Trump wins, we were going to have the market get, more of a sell-off. I thought we might even go down toward 2,000. But it didn't happen. And I think last night I was watching, I can't remember when it was, but I'll tell you, when I saw Pennsylvania and I saw Michigan, I knew, and Ohio, these things to me, and then the futures just held, and the Mexican peso started holding, all those things, to me that was it. I think that the market said, all right, well, we just elected a billionaire who's been pretty successful most of his life to be president. All right, well, let's really think about that. Is it really that bad? And I think that's the whole point. So I think right now, what I said about the NASDAQ, in last night's note is incorrect. I didn't expect it. I thought there was going to be more of a knee-jerk sell-off on a Trump victory, and I think what I said here is incorrect. I think the Nasdaq will not do as well, and I think the small caps, the industrials, the domestic sort of secular growth. I mean, cyclical growth, smokestack companies. That's where the strength is. Alibaba, I think it can wash out lower. I think you can see it go down to this old high around 85, and I think we should wait for that. Is Tenet Healthcare a buy? I don't think there's any. These companies. I mean, Tenet Healthcare has got more debt than like. I mean, I don't know, but this is like not. I mean, this company has no value. I don't think when you really think about it. I'm taking a quick look over at something here, but well, I'm looking at my other computer to look at their balance sheet really quick. I want to make sure I'm not speaking incorrectly, but I'm 90% sure these guys have got. Yeah, they've got 16 billion of enterprise value and $1.5 billion of market cap, which means this stock can go to like -10 and still be expensive. So no, Tenet Healthcare is probably going away. They're probably going to join the ranks of Eastman Kodak and Sun Edison, and it's not a good place to be. So no, this stock is never going to be a buy. All right, should we hold the Hormel calls? I like Hormel, but things are right now. Consumer staples are bad sectors, so I think this is probably best just to exit. What are good sectors that would be? Well, I'm going to develop those ideas more, but I think the industrial companies. I've got a few here. I think McDonald's. I mean, this is a weird stock. It's something of a consumer, staple stock, but this is a stock that this company is a survivor. It's one of the, I think that this one is going to have a year-end rally. I think things like FedEx, Amgen. Oh, here we go. Energy, Apache. I mean, this stock I think they increased. They found a bunch of oil. They did something here that was bullish. Let's take a look over on Research Lab on September 7th at APA. Discovers significant alpine play. So you can click on this and you can read what they actually said. Sounds good to me. I'm not a geologist, but I know when a stock goes up. So chart is very bullish, and I think right now these domestic. I mean, where is this? Alpine play in the Delaware Basin, which is in Texas. So this is domestic energy. That this remains the place to be. Apache to me is bullish, and I'll tell you another one. I just think Encana. I mean, this stock is just really bullish as well. We've seen bullish paper in this one. It just refuses to back down. I got to say, I am not a huge fan of natural gas. I mean, to me, it's a really confusing commodity. But, I mean, this thing has been holding support. NG futures. Actually, I'm wrong about that. I thought, it was holding this level here, and then it actually broke below that. But, nonetheless, these names have been strong. I say this because the thing that had grabbed my eye, we did an alert on Devon Energy, and I don't know how those calls are doing, but they're probably up a lot. And I think Encana the chart is just really bullish, and this stock's been really good. And I think Encana is going to move higher as well. Microsoft, also I think has the potential to have a good end to the year along with Boeing. These are like big Dow Jones industrial names. I know it's a tech name, but I just love Applied Materials. This company is just awesome. Earnings are not that far off, and I think it's going to just rip. And another one, maybe it's not the best, but I think Whole Foods. This stock has bottomed. They've got activist investors in there now. I think this stock, consumer staples not the greatest place right now, but this has got other stuff happening. One moment. This has got other stuff happening. So breaking that 50-day moving average. I think Whole Foods can move higher too. I'm going to do some more research. At this point, we're in new territory, and I'm still studying things. I want to go back and look at earnings and stuff to really get a better sense. Stillwater Mining. This company has some really good fundamental news that I think they have increased their production from some mine. It's probably pretty good. I'll be honest. I mean, I've been somewhat baffled by platinum and palladium. I just don't know per se, but this seems to be like a pretty good name. What I think about the cybersecurity names like Palo Alto and FireEye, these now fall into the category of overly expensive growth stocks. These actually might. These guys report earnings soon. I'm not sure. These companies could have something that I don't know about going on. It is interesting because I don't know how many of you guys still work in the world of corporate America, but I mean, you can't go anywhere now without running into, we're upgrading our cloud security to blah blah blah, and it's all great. I mean, obviously you got to do that stuff, and we got an amazing tech team here, at Options House. I don't know much about it because it's like not my specialty, but I think that there is a secular trend happening now of the IT security. It's not clear to me who are the winners and who are the losers, but something is happening. So I don't want to say too much about this aside from the fact that there could be a little bit more meat on the bone in this than there is in a Google or a Facebook. CRM, I don't know about this one. I feel like this company actually, they had a pretty hideous quarter last time around. They're very expensive. I think these tech names are problematic. Paycom is one I've liked, but it's in the wrong area. Great stock. This is one also great earnings. Who cares? Let's sell it. So I think that there's a rotation in a certain extent against these. I would avoid Salesforce.com. I think their last quarter was really bad, and I think they basically showed their hand in a way that I'm surprised. I think this was I was surprised by how negative their press release was. They basically came out and said that like we're losing business, and I think that they're peaking as a business. I think this stock should definitely be avoided. Ulta, is it good to buy? I think you're asking if we should buy Colt and Ulta Salon. I'm not sure what to make of this here. I like this name, but I'll tell you, this stock is just really sloppy. I think it's one to buy, but I'll be honest, trading it has been a good way for me to just, lose money. It's been very frustrating. EEC. I don't know what, RRC. This is probably good as well, the whole natural gas thing. I don't know much about this stock, but I'll tell you, this is one where I think the risk reward could be skewed in your favor because, it's holding this level. The chart itself, when you look at it, say, wow, that's kind of bearish. The 50 days has to go through the 200-day. But I've seen this kind of pattern before, and the key thing is that it's making a higher low, and it's doing it at a level that is something of a support zone. I want to just look over here really quick. I just want to make sure they don't have any strange debt or anything. I find natural gas very confusing. But I think that I think the stock's probably going to rally. Now is also the time seasonally when natural gas does well, when they build the inventories going into the winter. So I think RRC here is probably going to move higher. It's still though, I think you're going to see it chop. Look at the 10-day moving average coming down. I think you're going to see it chop around here. I think you know what? Put a limit order at 32. and I think you'll get it. Will Facebook go down more? Um, I think Facebook had what I would really call a really solid C quarter. Um, I don't think it was all that impressive, and I don't think it right now. If the market were going to be bearish, I'd say this stock's going to break 120, but I don't think it is. I think this stock is going to languish around here a little bit. It might have kind of a digging down. I think it'll maybe go down, you know, I think right now the momentum is bad in this stock, and I think that it's not going to go down a lot more, but I think it's going to bleed lower. I think it might even go down to like 115. In my opinion, this is a stock where you want to have it start to move, and it will. But see that 10-day here turn positive, and then boom, it had a nice stretch. And this company's done this before. See here, it rallies, and then it pulls back. This is your, this is the, and with options, you can really catch these moves in this stock. But right now, that 10-day moving average falling, I would be wary of this. I don't think it's going to rally quickly, and if it does, you're going to have a pullback to the rising 10-day. Right now, the 10-day is still falling on it. So, no, I don't think Facebook is – this is one we want to let it go from bad to worse to stable. And I'm not saying a lot worse. I mean, 115 maybe. But I think you want to wait for that second wave of selling in this name. That's what I think about Facebook. I'm trying to see. I'm sorry. Let's see if I don't want to miss your question. NG is in a severe downtrend. Well, this is a gold miner. This is what I'm saying here. I think I think these gold miners here are just they're more of a crapshoot. I don't think the risk reward is very favorable to them. Starbucks, China exposure, growth or drag. I don't like Starbucks. I don't really care about their Chinese growth. It's just this stock is just. I think everybody owns it, and everyone likes to talk about it. And I think people need to sell it before it really gets too attractive. I don't know if it's going to go down much more, but I wouldn't overthink this. I think this stock is look, it's got a bullish engulfing candle down here that you can make a case of, but it's still got a lot of just bleeding lower. It hasn't really, it's maybe broken this downtrend, but you've got to see it prove itself. And I'll tell you, I really would have preferred to see it get above this line and hold it, but it keeps hitting resistance there. So I think Starbucks is, I think it's just stall. And I'll tell you, China's well and good, but I think that their domestic story is stagnant. And I don't think that they are growing in the U.S. anymore. And if they really stall out in the U.S., China is just a cop-out. This is an American company, and it's kind of like Nike or some companies saying, "Oh, well, we're going to grow in this other area." When it's like, well, if your core business is declining, it's like, that's a problem. So that's what I think about this. Sorry, I got a lot. There's some other questions here, and I'm not going to have time to address them all. Those ExxonMobil puts, they did work, but I tend to think at this point, this stock's got a bullish engulfing. I don't think it's going to go down much more. So I think this is probably going to move higher. I would not hold those ExxonMobil puts. I'm going to take one last look at Xerox, because I do think this is just a cruddy company, but I don't know. Those puts in Xerox, I think, did pretty well through this morning. But this is trying to make a higher low now. This might actually kind of move back up a little. So anyway, what do you think about Tesla considering Trump's win? I don't know. I think the bigger problem for Tesla is an expensive growth stock. I still think the narrative in this name remains what I've said all along. If it can be proven that they are a bona fide automaker that's going to survive, it's a good name, but it's very expensive, and it doesn't really fit into the thesis today of let's drill for oil and gas as opposed to let's have solar panels and electric cars. So it's not really the kind of vibe that we have today or the thesis today. Solar is very weak today. This stock to me looks like it has downside risk. It has a bearish descending triangle. I'm not saying it will break down, but it does have a bearish ascending triangle. And if this stock goes to like 140, you're going to say, wow, well, it was obvious it was going to go to 140 because it had a bearish ascending triangle. So I think right now it's got a lot of risk. If it's going to rally, it's got to break this pattern. And in my opinion, that means it's got to close above this candle on the 27th. It's got to close over 214, 215. As long as it stays in this pattern, I think this stock's got risk of breaking lower. So I think that's what I think. All right, folks, I got to jump. Hope everyone has a great and profitable end of the trade. Oh, actually, I do want to read something else. I want to mention something else. Some of the other option activity that was interesting is there's call buying in Taser. I like Taser. I own a little bit of it. I'm going to just hold them through earnings because I just think this is a great stock, and so I own this name. Earnings are tonight in Taser. We've mentioned this one, but I want to mention one last thing here. So there's a little thing I mentioned today, but I want to just share this with you guys. If you're reading from Advantage Point, you didn't see it. And I said buyers and sellers, companies, and news. Donald Trump will become the 45th president of the United States on January 20th. This is jarring to many, but don't expect the market to stay worried for the next 2.5 months. We will soon return to the factors that actually impact sentiment: buyers and sellers, companies, and news. There will be earnings, there will be takeovers, there will be holiday shopping, and there will be job reports. While comparisons with Brexit dominate the news, there is one major difference. The British vote involved the single issue of withdrawal from the European Union. And even then, the ultimate impact of that move is unclear, even if it survives the UK Supreme Court ruling early next year. Trump's victory, on the other hand, has much less straightforward impact. Yes, there will be some pressure on trade partners like Mexico and China. But this will also take months and years to unfold, which takes us back to our first point. Over those months and years, we will still face the reality of buyers and sellers, companies, and news. In the end, the market is like a pool. Its level is based on the amount of water, the supply of equities, and the dimensions of the pool, the investor base. A 400-pound person doing a cannonball from the high board. Yes, it makes a big splash, but over the long run, its impact fades. That's not to say we go straight up. As I have cited, I see some signs of worry in the economy. Jobs data is somewhat weak, and I remain wary of oil. And I was not massively impressed by earnings season, and I see a lack of sector leadership in the market. But that takes us back to the reality of buyers and sellers, companies, and news. So my point in all of this is people like to make a big deal out of politics because they get paid by selling ads to be on TV or to read their newspaper. But at the end of the day, we don't do that here. We are focused on the things that actually matter. That's what Research Lab is going to give you. That's what our strategy note is going to give you. That's what Market Action is going to give you. So we look forward to working with all you guys going forward. If you're interested in getting my strategy note, please email me at david.russell@optionmonster.com. And hope everyone has a great day. We'll see you tomorrow or next week if you're with Advantage Point. Take care, folks.